And let me share my screen as well. So over the past few weeks, we have been going through the business model canvas. We are now at section 7. So actually, let me share this and then I'll do a brief overview. Let me see if I can scroll faster so we can show it. Oh no, that's size. Doesn't let me skip. All right, I'll just share it. Go ahead. So the different areas of the business model canvas that we've been touching on. And actually, Chris Beth, remind me at the beginning of each section, when we go to the next page, we should have another layout of the business model canvas and highlight the section that we're in. That way we can show where we've been. So we've been talking about the problem that we're solving. We've gone into the solution for that problem. We've gone into the customer segment of who has that problem that we can provide the solutions for. We've gone into the value proposition of how we explain how we solve that problem with our solution so that we differentiate ourselves from other competitors or other people that have that same product or solution. And we've talked about the customer relationships and channels. So how we get our product message, our value proposition in front of the people that we feel will buy. And of course, over time, we're going to refine that. So we talked about our customer avatar that is the ideal gold client for who we're trying to target, and then brainstorm some different ways to get in front of that client with either social media, calling them, going door to door. We're talking about with Detail Ignites, I used to go door to door every day, just trying to make $100 cleaning cars. And also, and so that's where we're at today. But now, and sorry, Chris, but did I miss anything as an overview that we touched on?
No, I nailed it on the head. Today, we're going to be talking about the revenue, right? So putting that first part of the canvas together, how are you going to be making money, right? And that's the question. Is it enough money to sustain your operations? We're going to look into that as well today. And Ryan, I just want to say, I know for those of you that are just joining us, Ryan got really excited because we're going to be using a spreadsheet, and he loves spreadsheet. And I think, Ryan, if you share your journey of loving spreadsheet as the program you went into and what happened in there, my message from Ryan's story is nothing is ever lost. So good week, bad week, as long as you could pull out the journey from the dry seasons, the high seasons, all of it, nothing is ever lost. And I think Ryan, facilitating this session today is a testament that sometimes you go down different pathways and you pull things, maybe the pathway didn't work out for you, and then you could pull things that could help you later on in life. So make sure you find those lessons in the challenging times, make sure you find the lessons in the successes as well. And it's just about building momentum. So yeah, I'm excited. Ryan, the floor is yours.
And hey, really quickly to touch on it. So I did go to Sheridan College and graduated with my business administration diploma in accounting. But you'll notice I am not an accountant. So that journey of a 3-year diploma took me 10 years. And it was, when I was younger, I was good at math. And so you kind of you tell your parents like, oh yeah, I'm going to be an accountant. And that was the journey all the way through. And then when you get into school and get into college, you realize accounting is quite boring. So it was, I was drifting for about 10 years in and out of school and not really serious about it. And it was when I actually got laid off from my job in 2009 and decided, I'm going to go back to school. I'm going to start this business with my brother, because he's the one that liked to clean cars. And I was like, oh, I've been doing this business course. So let me actually go to school and learn how to run the business properly. That's where I was able to focus. But also, I love being able to work with numbers. So it's not to say that I was going to spend the next 50 years in front of a computer doing bookkeeping for clients and That to me was not ideal, but learning it allows me to now explain it in a way that people understand. And I get excited about it because numbers tell stories and numbers allow you to make decisions. And then it's the finance side of it. So bookkeeping is more straightforward, whereas it's like putting in numbers, what happened last month, what happened last week. And then you say, okay, you owe this much to the government. But finance is where you get to be creative with the numbers. You get to see when you change numbers, how does it tell the story of your business? Is your business profitable, or is it at a loss? And you need to make tough decisions about things you can't spend money on anymore, or people you might have to let go or not hire yet. So that's why I love finance and numbers so much. And again, we want to make sure that you get comfortable with the numbers. It's one thing for Ryan to like a spreadsheet, but you have to also enjoy numbers. At least you don't have to love it. I'm not saying like love numbers and love a spreadsheet, but you have to understand it. And I find when you understand it, you get more comfortable with it. So our job today is really to make you comfortable with the numbers so that you understand, hey, how much money is coming into the company and how much money is going out. And am I just running a hobby, or is this an actual business? So when we talk about ways, and as we go into the PowerPoint here, so our segment is on revenue, revenue streams. So we do want to understand what are the different ways that you're bringing money into the business. And a couple of the ideas on ways that you can monetize your idea, of course, an asset, you're selling a product or a service. So that's where you're selling a physical product. And sometimes they talk about you can sell a business as an asset. So for Detailing Nights, we sell licenses to our company. That's another example of selling an asset. Or you can be using a usage fee. So paying a fee to see a specialist. So if you're a person that is consulting, people will be paying a fee to come and see you. And that time that you're spending with them is what they're paying for. Also, they have subscriptions. So your product can be, I'm not sure if you've seen those monthly subscription boxes where every month people are paying and you're getting products in the mail, or a service. A person, for example, they could be getting their car cleaned every week. So they buy a subscription service and we just show up every week. Oh, let me get to the next one. Also, lending, renting, leasing, those are ways to also bring in revenue. Licensing, I mentioned. So you're granting the ownership or the usage of your brand as a license. And then there's advertising, where let's say you are on a platform, social media, maybe you're on Threads now, and people want to get their product in front of your audience. So they would be paying you to be a sponsor or an influencer for their product. They're advertising on your platform. Or you may see Google ads. You go on the Google search engine, on the side, there's ads there. So those are revenue streams through advertising. But the main ones that we typically touch on is products and services. So we're creating a product and we're going to sell it to those that want it, or we have a service, again, that solves a problem and people are going to pay you to deliver the service. All right. So key things to think about. And a lot of times we think we have this product and we just make it and then we try to figure out who wants to buy it. But we do have to go deeper into what does it take to create that product. So when we get into costs and cost of goods sold, you're going to be hearing us talk about the economics of one unit. Like, what does it take to make that one unit and how much do we sell that one unit for? We're not going to go too deep into income statements and financial ratios. I will show you a brief income statement, but really when we do the cash flow projections, inputting those numbers creates the income statement. And then at the end of your tax year or at the end of your fiscal year, that's when you typically look at income statements to see how you did over the past year. But as you're operating, we're more in the bookkeeping realm of just seeing what happened that month. Sometimes you can check it daily, but I would say checking it each month to make sure what actually happened and what do you have to adjust for the next month. Okay, so that's an example. So we'll go deeper into examples. So one thing questions to think about as we're going through this session today is, how do you plan to make money from the idea? So we already did get to hear your ideas over the past weeks, what exactly you're selling. So when you get this section, you should have no problem writing down, this is what I'm selling. You should have an idea for the price point, but I'm hoping that after today, we'll have a more, I'll say, a focused reason why you're selling it at that price point, because we have to justify why we're selling the product at that level, because the business has to be profitable. And when we're doing the spreadsheet, I'll tell the story of where we started with Detailing Nights, selling it for too low, and then how we were able to adjust the price so that we're actually profitable. Oops, can I go backwards? All right, there. And then we were talking about different ways that people can buy from you. So we won't go too deep into how they're buying it. We're more focused on what we're selling and how much we're selling it for, and how much it covers your expenses. Oh, is this like on a timer? And the last one, if I go back. Yes, and then what payment tool are they using? So either they're going to be on your website, purchasing through e-commerce platform, or if you're in person, they could be purchasing through something like Square, one of the mobile, or they're just giving you cash or doing e-transfers. We would want to know exactly how you take on payments. All right, so that's the revenue section. I'm gonna skip over this area and go to section 12 just to touch on expenses.
If you stop sharing for a little and then zoom out, it will take you there faster. And if you share with sound, so if you stop, unless you shared with sound before, so stop sharing, and then when you reshare, click on the bottom to optimize share so that the sound can come through for the video that's there.
Okay. Yeah, while you're sharing, you know what, you can I just click share again, and then you can click share sound.
Oh, they changed it. Okay, cool.
Oh, this is the area, right? Okay. All right, so for costs, did you want to touch on the costs?
Yeah, so part of, as Ryan shared in the first part, we are looking at revenue, right? We talked about revenue a little. So revenue is money coming in to the business. Cost is money going out of the business. And the main thing I would say is finding a healthy balance between both things. Obviously, we want more revenue coming in than we're spending going out. Really looking at some of the costs, especially, I know some of you already started running your business. Some of you are brand new. So looking at this section, some of the costs to consider is your startup costs. I oftentimes say when I started my own business, and it may be the same for all of us, I think for entrepreneurs, we are a number one investor. We're investing our time. Sometimes we're investing our savings. We have to understand what we need to put into this business in order to get it off the ground. And this is what we consider to be the startup costs to get started. The other type of cost that we consider fixed costs, things that are coming out every single month. So for example, whether you're running a business in a rental space or in your home, there's a fixed cost of rent, right? Money has to be paid in order for you to have a roof over your head to run and operate your business. Looking at taxes, looking at insurance for your business, depending on the industry that you're in. but there's monthly fixed costs. There's variable costs, right? So sometimes variable costs, depending on your business, and it looks different for everyone, but perhaps you're shipping product, you're manufacturing something in bulk one month but not the next month. So depending on what is happening, there may be variable costs that you may experience in your business as well. Ryan, you can go to the next one. You see, we talked about previously in the revenue section, the unit economics around one unit to be able to produce one unit. Economies of scale is now considering, can I produce 100 units and still survive? Can I produce 1,000 units? And really just understanding what happens as you produce more widgets or more service. Do you have the capacity for your cost to go down, or is it actually going up and inhibiting your growth ultimately? Economies of scope, looking at how will the cost decrease as your operations grow as well. So and this is where I go back to that happy balance, right? Yes, we want to grow, but it is costing us more to grow than actually being able to save and cut costs as we produce more units. These are some of the things that as entrepreneurs, we must keep in mind as we're building momentum in this way. And then just goes on to say the cost you incur directly determines the price you will place on your product and or service. Some people, and I will tell you this, some of us price our products so low that we are just choosing a number because we don't want to be so high in the market, not truly understanding our costs. So something to keep in mind, we want to make sure that the cost, we know the cost and we're not guessing about the cost. And when we determine our price, some people price for break even, some people price for just a little bit more. You want to know, is it a cost-driven price? Are you selling a high premium product, or where are you sitting? Some people go for the value-driven, right? So, looking at trying to not price yourself out of the market, but just understanding that whichever costs, whichever pricing model or placement that you put your business, you must know what it's costing you. And then you're able to determine, okay, I can have a profit margin of, 3 times, 4 times, 6 times what it's costing me. So things to consider in that way. Ryan, you can go ahead. And so just out of curiosity, and I know a definition is there, does anyone want to share what they understand cost of goods to be sold for your business? Anyone? Feel free to unmute.
I'm sorry, could you please reiterate the question? Like, do you mean what is the amount of the cost of goods?
Yeah, so if you know so you could read the definition of a cost of goods on the slide here, but I'm curious if you've either heard the terminology before, if it's your first time hearing it, what do you think some of the how would you define cost of goods sold for your business? How much is it costing you, Tessie, to do and produce? I know you're getting into the hairstyling more, but let's say your wigs. How much is it costing you to actually acquire and sell your wigs?
Yeah, so so I offer 2 services, right? So there's the actual selling of the wigs, right, which come styled, and then there's the wig maintenance services where you can have your wig washed and styled and cut and all those kind of things. And so there's 2 different systems that I use. One which I measure the amount of maybe color, shampoo, conditioner that's being used for a service, and then I will price it according to how much supply I'm using. And then for the actual wig making or the construction of the wig, I will consider the hair extensions used, how many hair extensions are used, and perhaps some of the styling products. And I also include the cost of the labor for all of the things that are involved in creating the look. So that's my understanding of cost of goods.
Hey, yo, thanks for sharing. Thanks for sharing. We'll take one more before we play the video. Anyone else? As for your business, how are you considering the cost of goods sold? And as you're thinking about it for your business, I will read this definition so you have one, and really thinking through about personalizing, looking at, and Ryan's going to get into this today as well, so I'm excited about that. So cost of goods sold, or COGS short form, refers to the direct cost of producing the goods sold by a company. So we could go back to that unit economics. To produce one thing, what do I need, right? And that's the question, what do I need? And so all of the things come into play in this. So this amount includes the cost of materials and or labor directly used to create the goods, right? So I think, Tessie, you did an amazing job identifying. You have the wigs, the hair that you're using, the products you're using, and your time as laborer, right? So to do that one time, and I don't know if you have like the same wig style you produce all at once, but then if you're considering, okay, we have 10 different signature wigs, it may look different for each one, right? Because you're using different hair materials, all of those things, right? So things to consider. And I see you unmuted, Tessie, go ahead.
Yeah, I was agreeing. I said, absolutely. I actually have like an Excel spreadsheet and it has different formulas in it. So now I can, at first I was doing it with paper and pen, but now I just have like an Excel spreadsheet and I'll just put certain numbers in and then it'll give me the value that I need so I can price everything right every time. Yeah.
Hey, that's awesome. And Ryan would love you for that as well. That shift from paper to spreadsheet. And it excludes indirect expenses such as distribution costs, sales for like how are you selling, marketing costs, all of those things. Really, from this lens, we are looking at production, right? So Ryan, if you want to just click to play that video, that would be awesome. You and your 1,000 tabs.
Cost of goods sold, commonly referred to as COGS, are the expenses directly associated with producing a product, such as the cost and transportation of raw materials, labor needed to manufacture the goods, and storage fees. COGS does not include indirect costs, such as sales, marketing, or distribution expenses. From an accounting perspective, COGS is not an asset, nor is it a liability. It is recorded as an expense on an income statement. The cost of goods sold relies on the value of inventory during an accounting period, which can be calculated by taking the beginning inventory, adding purchases during the period, and then subtracting the ending inventory. As an example, if a business has a beginning inventory of $9,000, makes purchases valued at $5,000, and is left with an ending inventory of $2,000, the COGS is $12,000. Understanding the cost of goods sold is important for many reasons, including setting prices that leave healthy profit margins, driving important decision-making like finding new vendors with better material prices, and is a key component in determining a business's gross profit and net income. Ultimately, the cost of goods sold is a critical piece of information businesses need to become more profitable.
That's it. Thank you. Yes, and you'll have that. You can go back to it if you've never considered it before. It may feel like a lot. I think sometimes when talking about financials, initially it used to just go over my head. But as an entrepreneur, whether math is your strong suit or not, you need to know these things, right? Financial literacy for us as entrepreneurs is very important. It doesn't mean, and I'll tell you in my own journey, it doesn't mean that I'm filing my own taxes, I'm doing my own bookkeeping and stuff, but I know what goes into that so that when I pass it off to my accountant or bookkeeper, they know what to do, right? And I have clarity in terms of what they're doing. So don't feel overwhelmed by talking about numbers and learning about numbers. Just know that it's an essential part of the entrepreneurship journey that we must, it is an imperative, we must know our numbers. I think about, you know, my mind just flashed, you know, sports athletes, super fans, superstars in that space. Oftentimes when they get into the sports at a high level and lots of money coming in, they get agents, and we know the stories, musicians as well. Because they were not handling their money disappears on them, right? And so the same could happen for us as business owners, money coming in, money going out, and we're like, have no clue. So this section is really to equip you all with some education around financial literacy for your business in order to keep on top of things. So Ryan, you can go to the next one. So again, this here is just an example. So Mark has identified his cost of goods sold, and we're gonna see an example of what he's come up for his home care clients. So in this example, similar to what you had learned, so looking at staff labor, $15 for every 100, $15 for 100 hours dedicated to a client. We learned previously in the revenue section how much he wanted to be charging, right, up top. And so he wanted to be charging the customer $3,000 per month to deliver the service. Every month he's serving 100 hours. Equipment's gonna cost $500, and the permits to run his business is going to be $1,000. So total cost of goods sold, so direct costs associated with delivering a $3,000 service will equal $2,100, right? So I hope this example is clear. So before we talked about his revenue, he wanted to be charging $3,000. So I'm gonna give you all a chance to do some quick math. So you could put it into the chat. If he's charging $3,000 a month and his cost of goods sold is $21,000, what is his profit margin looking like?
Great, 2,100.
2,100. Yes, 2,100. So 3,000, 2,100. What is the margin looking like?
Do you times it together?
Oh, that's a good question. Would we times it, Ryan? I'll just give you a quick chance to interject and support. I think that was call a friend.
Right. So we would take the revenue that he's making and subtract it from the cost of goods sold for him to do it.
Okay, so not timesing, subtraction.
Okay.
Yes. And I see Wengishi has the first one, and that is correct.
What was his answer?
Her answer. Yes, so 3,000 minus 2,100, and Ryan's gonna do it on the screen there for us. It is 900, right? So now, knowing this, he can say, do I want for all of that labor, 100 hours, lots of time? And imagine he's thinking about creating an agency, right? So a $900 profit, is it worth it? So Ryan, you can go to the next one. So this is for you all, right? What are some of the costs expected while running your business? And here you could just, the invitation is just to list out all of the costs, and then you could go back and say direct, indirect, and then you're able to really pull that out. So Ryan, you can go on to the next one, and I know you're gonna get into your spreadsheets a little. And this comes back to some of the things Ryan's going to talk about in a little bit. What are all of the expenses, right? So this is where you're now placing those expenses and actually quantifying them, right? What is it? How much am I spending towards advertising, credit card processing fees, training and development, business insurance, licensing fee, wages paid to employees, different things. And there's others that Ryan will show you in a little bit. But the point of our time here together is really looking at the importance of knowledge to discover what it is truly costing us to run this business. And one of the things that I will say, far too often I meet entrepreneurs like myself. My journey started out the same way. I started my business and I wasn't paying myself directly. And part of the reason is that there was no line item to account for Crispet's time. If Crispet had to hire myself, and I'm talking about myself in a third person, if I had to hire someone to do and run my business in a full-time way as I was doing for free, and money's coming in, but money is going out and none to me or the employee, they wouldn't want to do it for free. So from the jump, the invitation is starting to factor your time, your dime, your personal goals apart from the business, because the question is, could this business help to sustain my personal lifestyle? And if the answer is no, we got to go back and work on those numbers. Ryan, you can move on to the next sheet. And so this is where we get more specific into the direct costs and the cost of goods sold as well. And we'll have a time, right? So Ryan, the spreadsheet is yours. You can start sharing your spreadsheet. So over the next week, really the invitation is, what am I pricing? Does my pricing actually work? And some of us, you know, and I work with a lot of female entrepreneurs and, you know, young and mature entrepreneurs. And I see that sometimes when we want to talk about money, we shy away from it. If we are entrepreneurs, the discussions about revenue is definitely part of the equation, right? And so my invitation to all of you, I know this section might be, again, financial literacy is very important. You'll have access to this recording. Things that Ryan and myself have said today, go over it again. If you have questions, come to the table next week with questions, right? We don't want you to be building in isolation. We will be spending some more time on this as well. So Ryan, the floor is yours.
All right, wonderful. So one thing I was gonna put into the chat, the spreadsheets templates. So if we can click on this link and it'll take us to this spreadsheet that I'm gonna be able to walk you through. And when you come to the spreadsheet, at the top left, you can go to File and either download it as a Microsoft Excel so that you can work on it in Excel, or you can make a copy of it if you want to work on it in Google Sheets. So just let me make sure when, oh, sorry.
You haven't put sent. Yeah, I was just about to say.
Yeah, I sent it to somebody direct.
Yeah, so Ryan, and there's that little black chat box on your screen. We can't see the full screen, so you may want to close your chat on your end.
Oh, gotcha. Make sure that anyone with the link can view it. Yes. So as I was saying, in the top left where it says File, you can download it as an Excel file, or you can make a copy of it. And then when you make a copy, you can name it you can put a name on it, so that's, and you can take off the end part where it'll be your cash flow projections. So you can put your name, and it'll be, and your name and your company, then you can make a copy.
It's only giving me an option to download it. I don't know if others are seeing that as well.
Oh, yeah?
Yeah, no, it's not giving me the option to make a copy.
Is everyone else seeing that option or no?
I see the option.
Okay. Good, good. Right. And so once you do have your copy made, so what I'll first do is I'll walk through the one that I did as an example. That'll take about 15 minutes. Then we're going to be working on your spreadsheet. So we want to make sure and get numbers into your document so that you can start getting the feel for putting numbers in. And then over the next couple of weeks, or we can book time one-on-one. If you're stuck with it, then we can meet and go deeper to get it done, but at least we want to get it started today. So I just want to make sure with everybody, put a 1 into the chat if you're able to click the link, make a copy, and now you have your spreadsheet open. Just want to make sure, see if anybody else is stuck. Oh, and good to see you, Manisa. Okay, Joshua, good stuff, good stuff. All right, I think everyone got it. Good stuff. Who are we missing? Ash and Ashley, is everything okay? Let me know if it's giving you an error or weird message.
Oh my goodness, this document is so epic. All my life, all the tears I cry.
That was funny.
Who
I'm
said
good.
that?
I just logged in with the wrong.
That was Tessie.
I YouTubed so many things. I tried to create my own, and then I got myself something like on Etsy, and then I didn't download. This is just a blessing. So thank you so much.
Hey, that's why we exist, is to make life in business easier at minimum. And so Aaliyah, you're saying you're okay, you're just in the wrong link?
I'm good. I got it.
All right. Perfect. Okay. So, oh, actually, let me show you the example. Where's my example? Where's the example? All right. So the example will feel like a lot of information coming at once, but I just want you to kind of let it soak in as I walk through, and I'll use the example of detailing nights. So typically when I work with a client, we start with their expenses. So you'll see a section here that's called startup costs. So the spreadsheet actually auto-fills a lot of the cash flow projections. Hold on. And let me know if these boxes are covering up stuff. So you'll see the startup calculations is where we want to start. So for your business, you want to start thinking about what are the things that you need in order to get it off the ground. So you'll see as an example, I put that we have to pay for a rent. So we want to rent an office. We're going to have internet. There's a certain amount of equipment that we need to buy for the company. And then we put the cost here. So there's a certain amount of advertising that we're going to do at the beginning. We do need insurance. We're going to be driving around the city, so we need to pay for gas. There's some office supplies, and we're buying, actually, it's not a truck, it's a Prius. So, so a car. One thing that I do want to start adding in is lifestyle, but not yet, because you need to make enough money to live the life that you want. But I'm going to put it here as just a placeholder, but I'm not going to put anything in the cost just yet. But you'll notice when I put in lifestyle, if I go to cash flow projections, it'll add it in as a line item. So if there's a lot more things that you need to add in, you can create rows. So if you right click and insert a row, I would say that do it first with what's there and then start adding stuff, because at least the majority of the numbers will be in. What's easier is if some of these items you don't need, just type over it and it'll put it into the spreadsheet for you. So you'll see now these items, we put in the cost for each of them and it gives you a total. So you do want to identify how much money are you able to put into the business, which is here for your owner's contribution. So typically we pull from our savings or from a credit card and put it in here. But if it's not enough to cover the actual startup costs, you're going to have a balance. So when I work with clients, that balance, we have to find that money somewhere. So a lot of times we can look and see our grants out there that's available, but more than likely a short-term loan or a microloan, because that's what we do with ACBN, is we provide microloans to entrepreneurs. So this would show how much of a loan you would need to now get this business off the ground. Because in total, you need 16,000, but you only have 5,000 to put in. So we're gonna get 11,000. Other options for getting money, hey, friends and family, they call it that heart money. You can let your parents know, cousins, uncles, friends that you're starting this business. You do a presentation for them and raise money that way, or you can go the loan route. For our microloan, it does do, the prime right now is 5%. We add 1.25. So it calculates all this automatically. If you're getting a loan from somewhere else, you would put in the rates here. And then it shows you the total cost of borrowing. You would put in how long you have to pay for that money, and it shows the monthly expenses. So this exercise is really to understand, what does it look like to start this business? What do you need? How much is it going to cost? Where are you going to get the money? So now when you do that initial exercise, you'll see it pulls it into the spreadsheet. And you notice I'm talking a lot about costs. So the costs get pulled in, but now we want to look at, what does that first month of operations look like? So for the rent, you'll notice the startup was 3,000 because I had to put first and last, but each month it's going to be 1,500. And to start out, so let's say it's actually 2,000, you'll notice the rest of the year, it changes automatically. So we're putting in the numbers for the first month, and then the rest of the year, it changes. Again, if for some reason the number will change somewhere else in the month, you can change this number. But generally, if it's a monthly expense, it's usually the same. So to start, just let it be the same so we can get numbers to work with. As we go, like as you're running your business, you can fine tune it. But you'll see the first month of internet, you'll notice equipment. We don't have to buy equipment every month. So it's a startup cost, but it's not a monthly cost. And then all the other ones we put in, you'll see we're not doing like renovations or anything. And one thing you'll notice here, the loan payments that we calculated on the previous sheet, it comes in automatically. So these orange sections, these are sections that automatically calculate. If it's a white section, actually, and this should be, hold on, this should be pulling into. Oh no. Okay, there we go. So if it's orange, it should pull in automatically. Things that are broken. All right, so let me pause here and see if there's any questions about the startup costs and then the monthly expenses. Because this is the section that feeds into the rest of what we're going to do. So I do want to make sure that we understand we're putting in our startup costs and then we're putting in our first month of costs. And you can raise your hand or unmute. But if we're good, I'll keep going. And Chris Beth, you can even tap me on the shoulder if I'm sounding complicated.
Hey, no worries. So just go back to that startup cost tab again, 1 second. So again, folks, it's an opportunity for you to brainstorm all of the costs that you have. In your version, it will be blank. So as Ryan showing you the one with the example, the sections, and Ryan, I don't know if you spoke to the color codes already. So the stuff that's white, you would fill in. The stuff that's orange, you do not have to touch. It will auto-populate accordingly for you. All right, so that's that. Yes.
Right, awesome. And so you'll see now, it'll auto-populate this monthly totals of your expenses. And also at the end, it's gonna give you a grand total for the year. So this number becomes your target for your business. You need to, at minimum, cover the cost of your expenses, but then you can't target that exact number. So you want to have a multiple of it. So usually for each month, we try to 2x expenses. So when we go into sales forecast now, we're trying to calculate to make double the amount of the monthly expenses. So you'll see, oh, how much was the monthly expense? Because I'm seeing a net loss here. Oh, so it's 4,000. So we go to sales forecast. So for the month, we should be making at least 8,000. So let me put this back to 100. So I want to show you an example of what happens when we have bad pricing. So when I first started detailing nights, I would go door to door, and actually it was not 40 now, it was $50. So I'd go door to door. So the car cleaning that we were providing, we were charging $50 for it. So now you saw our target to live was $8,000. So at that price point, if you put into the chat, how many car cleanings do you think we have to sell in order to hit $8,000 as a target? If it's $50 each. And I can even, feel free to pull up your calculator. Because if you take 8,000 divided by $50, I would have to sell or clean 160 cars. So when you put in 160, that gets our 8,000. But one problem with cleaning 100, oh, sorry, go ahead, Autumn.
No, sorry about.
You sure? Okay. So one issue is, can Ryan clean 160 cars in 1 month? Maybe, technically. How many? So if we go 30 days in a month, how many car cleans is that per day? Let's see. So 160 divided by 30. So I would be cleaning 5 cars a day. That is a lot. So if that's kind of out of scope for Ryan to clean that many cars,
do we round to the nearest 10 or something, or 100 or something? Because 5.33333, I know there's a simpler form to put it, but I just forgot. I don't know, sorry about that.
Yeah, we would round it up, so you wouldn't put the fractions. But again, cleaning that many cars is a lot for one person. So this is where I started to realize, and working with coaches, and even when Chris Beth started working with Detail Ignite, we had to adjust our pricing so that it actually made sense. So when we got it to $100, now to do 8,000, we only had to clean 80 cars. And that was possible. So there's two, when we see that we're not making enough money, you have to look at a couple of the, I guess, things that are happening. So one is the expenses. So you'll see in the cash flow. Oh, let me put this up. You always want to look at all the expenses that you have for this month and determine, is there anywhere that I can cut expenses? If everything is like, there's nowhere that you can cut, your landlord won't reduce your rent, or, you still have to drive. That's where you want to start looking at how many of the products that you can sell in that month. So 160 is not realistic. So we can only do 80 in a month. So we have to look at our pricing. So we were able to shift it from $50 each car clean to $100, and then it made it more manageable for the company. And now this has to go across for 6 months. Oh no. And then our target will change in July or month 7, because you'll notice I was going to hire a staff in month 7. So our target's going to change. So now the monthly cost is 6,000. We need to be making 12,000 a month in revenue. So we're going to go back to our sales forecast, and to do 12,000 divided by 100 is 120 car cleans. Okay. Oh wait, I didn't change it. 120. Right. Why am I still showing a loss? Maybe.
And the orange part, we don't touch, we just touch the white part.
Right, so I'm gonna show you.
Okay.
The orange part gets calculated now. Yeah, I'm nervous because it's still showing I'm losing money. Maybe my pricing is still not good enough. So hold on, let me switch the price to 120. Ah, okay. So that's interesting. At $100, you'll notice I was still losing money. It was a negative 15,000. So the pricing that I had still actually wasn't good. So it needed to be 120. Now we got a profit. And the reason that it was at a loss is because I wasn't factoring in the cost of goods sold. So now when you look at how to calculate the cost of goods sold, we have two variables. There's either labor or the supplies. So for the supplies, or for the labor, sorry, you'll notice I'm giving $22 an hour. So because I want to give a living wage to our employees, it causes our cost of goods sold to be higher. So if you know to make 1 unit, so to clean 1 car, so you notice we're cleaning 80 cars in the month. So we have to break it down to what does it take to do 1 car? So if we send a detailer, it takes them 2 hours to clean the car. We charge $22 per hour for that detailer. That gives us a total of $44 per car that we clean is what it costs in our labor. And I'll show you where this number now comes into the cash flow projections. In the cost of goods sold, it'll pull in the $44. And now it calculates based on how many cars, how many units you sold. It shows the cost of the total cost of goods sold for the month for labor here. And so all of this just automatically calculates. Now there's one shift. If you know that you're selling a product and the person that is putting it together for you, you give them a percentage, then this would change. So you take out the hourly and you'd say, let's say it's 25% of, if they clean a car, they get 25%. So out of the $120, they would get 25%. When you go to the cash flow projections, it would now go into the percentage section and calculate that way. So for your own business, you'd have to determine, to make the product or to do the service, are you charging, or is your labor being charged hourly, or do you give them a percentage and then you would put that into the sales forecast? So we don't do a percentage, we do hours. So it's gonna get 224. This should be automatic. That should be yellow, orange, I mean. Okay. So the other piece is the supplies. So the cost of goods sold for supplies is pretty, it feels overwhelming, but I was glad to see, Tessie, that you've created a spreadsheet that breaks down how to create your costs based on how much stuff you use. So to clean a car, we have our car wash, actually let me put solution. We have the all-purpose cleaner, we have carpet cleaner, we have leather cleaner, tire shine, glass cleaner, and the gas that we put into the generator or to drive. So in order to calculate it, we need to know how big is the bottle, and then how much of the bottle is used for every car that we clean. So if you're washing wigs, how big is the bottle? How much do you use? Gives you the cost per use. So that's where you put it here. And you also want to put in how many bottles you bought and what the cost of the bottle is. That way it all calculates how much you used. So how many cars can you clean with each bottle? And then what is the cost per bottle? So you'll see in the white sections, you're gonna put in how big is the thing that you're using. So if you're doing health, oh my gosh, what was Ash? Ash does ignited charm. So if you have candles and you buy a certain amount of wax, out of that wax that you buy, you put the total size. And then for each candle that you make, you would put the amount that you use. So for example, let's say the bottle is 16 ounces big, each candle is 4 ounces. If you bought one and it cost you $100, so for every candle you make, theoretically it would cost you $25, but I'm sure it's not this expensive. But just for an example.
Just an example.
Yeah, exactly. And so we want to do that for each of the items that it takes to make one unit. And I know if you're selling multiple things, theoretically you have to do this for each thing. But to keep it simple, you want to take kind of an average. So you don't want, if you have 15 products, to do the cost of goods sold for each product, and then you can keep adding them and adding them down here. You want to take the average of, if it's a similar product, even if there's 10 variations. So Tessie, even though you have a whole bunch of wigs, like maybe there's 10, average it out so that you understand what does it take to clean one wig. Or if you're doing the selling, like what does it take to purchase the wig and then resell it? Just so that the spreadsheet doesn't get overwhelming for you. So you notice it gives you a total down here. Oh, I better change this back. All right, so for an example, we have the car wash solution. So it's 17 cents, 25 cents, and it adds it up down to $13 in supplies. So this is how much supplies we use per car that we clean. So when we go back to our cash flow projections, it'll come into the supplies variable, and then the month is filled out. So every time you change how much you're selling, it changes your cost of goods sold. So if it's higher or lower, it automatically calculates. All right. So let me slow down here and see if there's any questions around the cost of goods